April 1, 2015. Real Estate Capital Scoreboard April, 2015. Chicago, Illinois, April 1, 2015. Calmer market conditions keep investors and developers scrambling to find profitable opportunities within an extremely tight yield environment. Developers face rising construction costs, mainly labor and materials, while investors battle fierce competition for core/core plus, higher quality assets. Winners include sellers and patient landowners with urban infill sites within desirable urban infill locations. Today, higher density areas drive new construction demand in many areas in central downtown districts, once considered too fringy. The real estate investment world is becoming flat, as demonstrated by flat profits. Most investors are at or near the bottom of their yield thresholds for mortgage and real estate equity risk. All-in rates of return hover in the middle to upper single-digit range for institutional assets, while second-tier properties attract double-digit money. Should yields continue on such a path, investors will look elsewhere for relative value opportunities. Flat benchmark rates. Investors are jittery about the continued low interest rate environment. However, even lower moving treasuries postpone any decisions to lock into longer-term interest rates. In fact, all of the floating rate benchmark indices including LIBOR and Bank Prime have barely moved from record low territory during the past few years, with no bumps in sight. Flat mortgage spreads. As funding sources become more comfortable with low benchmark yields, mortgage spread premium are settling at 140 to 220 basis points. Moreover, longer-term rates converge, as 10-year, 15-year and longer maturities are priced against average life treasuries based upon a relatively flat yield curve. Borrowers enjoy nearly the same rates on 10-year terms versus 20 years, for example. Flat property demand. Changing consumer spending habits, more efficient manufacturing and distribution methods and shrinking needs for traditional commercial office, retail and industrial space contribute to a flat, and shrinking supply, especially in suburban markets. The good news? Targeted new construction and retrofitted buildings meeting the technology/space needs of a new breed of users are improving the supply issues on a selective basis. Flat is where it's at, comments Gene Peck of the Real Estate Capital Institute. Adding, flat, real estate investment and development characteristics create unique opportunities for those that understand how to redefine space, closely followed by capital sources.